After you register your Hong Kong company, many founders focus on getting the business running and sometimes overlook one of the most important ongoing responsibilities: annual compliance. Staying compliant is not just about avoiding penalties. It protects your company's legal standing, maintains its good reputation, and ensures you can continue operating smoothly. Especially important if you ever need to open bank accounts, raise funding, or exit the business in the future. In this video, I'll walk you through the key annual compliance requirements for Hong Kong companies in 2026, explain what you need to do, and highlight the most common areas where founders run into trouble. Annual Return, NAR 1. The first key requirement is filing the annual return, also known as Form NAR 1. Every Hong Kong company must file an annual return once every year. The deadline is usually within 42 days after the company's anniversary of incorporation. The annual return contains important information about your company, including details of directors, shareholders, company secretary, registered office address, and share capital. It must be filed with the company's registry, and there is a government filing fee. Failing to file the annual return on time can result in late filing fees and, in serious cases, the company being struck off the register. Next is business registration renewal. Every Hong Kong company must maintain a valid business registration certificate, or BR. This is renewed either annually or every 3 years, depending on the option you chose when you first registered. You will receive a renewal notice from the Inland Revenue Department before the expiry date. It is important to renew on time to avoid late payment penalties and to keep your company in good standing. The business registration certificate proves that your company is legally allowed to carry on business in Hong Kong. Accounting records and financial statements. All Hong Kong companies are required to keep proper accounting records. These records must be sufficient to show and explain the company's transactions and to disclose the company's financial position with reasonable accuracy. They should be kept at the company's registered office or another place the directors think fit, and they must be retained for at least 7 years. In addition, most companies are required to prepare annual financial statements. These statements need to give a true and fair view of the company's financial position and performance. Even if your company is small, maintaining good accounting records from day one makes tax filing and any future audit much easier. Audit requirements. One question many founders ask is, do I need to have my accounts audited? In Hong Kong, the answer is almost always yes. Every Hong Kong company must have its financial statements audited by a practicing CPA, regardless of size. Be careful with a common misconception here. The reporting exemption for small private companies only simplifies the financial statements. It does not remove the audit. The only true exception is a dormant company, one that has passed a special resolution and has no accounting transactions at all. We'll cover exactly how this works in a dedicated video. If your company is active, plan for an annual audit. Keeping proper records from day one makes it much smoother. Profits tax filing. Every Hong Kong company that carries on a trade, profession, or business in Hong Kong must file a profits tax return, unless it is specifically exempted. The tax year in Hong Kong runs from 1st April to 31st March. Companies are usually required to file their profits tax return within a certain period after the end of the basis period. Even if your company has no taxable profits or qualifies for offshore profits exemption, you may still need to file a return and submit the necessary supporting documents. Failing to file tax returns on time can result in penalties and, in serious cases, prosecution. It is always better to file on time, even if you think no tax is payable. Other important ongoing obligations. Beyond the major annual filings, there are several other ongoing obligations that company directors should be aware of. These include notifying the company's registry of any changes in directors, company secretary, registered office address, or share capital within the required timeframes. You must also maintain certain statutory registers, such as the Register of Members and the Register of Directors. If your company has significant controllers, you may also have obligations under the Significant Controllers Register requirements. Staying on top of these smaller but important requirements helps avoid unnecessary complications later. Common mistakes and consequences. The most common compliance mistakes we see among foreign founders include missing filing deadlines, failing to keep proper accounting records, and not updating company information when changes occur. The consequences can range from late filing fees and penalties to more serious outcomes, such as the company being struck off the company's register or directors facing personal liability in certain situations. The good news is that most compliance issues are avoidable with proper planning and systems in place from the beginning. How CapTime can help. At CapTime, we help many foreign founders stay on top of their Hong Kong company compliance. We can assist with preparing and filing annual returns, handling business registration renewals, maintaining proper accounting records, coordinating audits when required, and ensuring all statutory registers and notifications are up to date. Our goal is to take the administrative burden off your shoulders so you can focus on growing your business while having peace of mind that your company remains fully compliant. If you need support with any aspect of your Hong Kong company's annual compliance, feel free to reach out to us for a consultation. Key takeaway. Annual compliance is one of the most important ongoing responsibilities for any Hong Kong company. While it may seem administrative, staying on top of these requirements protects your company and helps you avoid unnecessary problems down the line. By understanding what needs to be done each year and putting the right systems or support in place, you can keep your company in good standing and focus on what matters most, growing your business. Thank you for watching. If you found this video helpful, please like and subscribe for more practical content on Hong Kong company setup and compliance. See you in the next video.